Hey everybody, so yesterday I did a video on the MACD and the stochastic RSI, and today I'm going to do it on the relative strength index. So this is the third indicator that I use on pretty much every chart. It's called the RSI. I think it's one of the more important ones to notice, like long-term trends. So I use it for mainly monthlies and weeklies. I use it on smaller time frames, but the stochastic RSI does a really good job at that. So, but it is always, pretty much always on my charts. I just notice like long-term trends, trend line breaks, divergences, whether it's bullish divergence or bearish divergence or hidden bearish divergence. Divergence is just basically the price is going up while the indicator is going down, indicating a long-term top or short-term top depending on what time frames you're using. So if you're seeing divergence on a monthly, it's pretty likely that there's a market cycle top coming in. You don't always see divergences, but when you do see them, it's a very big concerning warning. So that's all I'm really going to talk about on the RSI. There's nothing more than divergences and trends. So right now we're looking at the monthly chart, and then this is the Bitcoin chart. This is all of Bitcoin's historical data. Okay, so if you look here, you've got a market cycle. Well, let's go back to the inception of Bitcoin. So when you have an oscillator on the monthly time frame, if it just came out, it's not going to be very accurate. So this data on the bottom left is pretty important. It's pretty unimportant right now, but as time goes on, you start to notice some types of trends. Okay, so this is from 2010 all the way to today. So what kind of trends do you notice, right? You have a market cycle top up here, and then a bottom right here, a market cycle top up here, bottom right here, top up here, bottom right here. So it's kind of green in the areas of where it's topping at. That's one factor. Okay, but if you also look, you're getting higher price action, but the indicators are kind of going, the oscillator is going down, so the RSI is going down. So let's pull this up and let's see what kind of trend can we see here over the entire cycle. So we'll draw a high here, and then this is the next high. This is the next high. So every market cycle, the RSI is getting lower and lower and lower. Now let's look at the bottom. So you know that the next market cycle, the final market cycle that we're in right now, is going to be lower than this, most likely because the trend is down. Okay, now we're looking at the bottoms of the market. Okay, the next one is lower, right? So the trend is continuing to be lower. So when you bottom in the market, it's most likely going to be lower than the next one. You don't know how much lower, but it has typically been lower. Okay, so that's the first thing that you notice, right? So it's creating lower highs and then lower lows every market cycle on the monthly. So that's one thing that you want to notice. And also, every market cycle top has been green. Could that be voided in this cycle? Yes. It is also lower. However, it's significantly lower currently. So I would assume that this would go up higher in this market cycle, the RSI, and probably turn green. However, this hasn't been green at all, and it looks completely different than these cycle tops up here. So something is probably going to be different in this market cycle. Okay, so that's one thing that you can notice for future cycles on stocks or crypto, at least whenever it comes to the monthly charts. Okay, so let me get rid of all of these real quick. And we can even look at the, so yeah, market cycle bottom, market cycle bottom, market cycle bottom. Okay, let's see if we can find any kind of divergence. So divergence again is very important for catching market cycle tops. So I would say, so here's one peak and then here's one peak. So this is something called hidden divergence. So when the indicator is going up, or the price is going up, and the indicator is either going the opposite direction or it's going sideways. So there's a couple different ways that divergence can play out, but this is hidden divergence because it's going sideways. The next market cycle top also has hidden divergence. Okay, the next one doesn't, or yes, it does have, it has bearish divergence. Okay, so the indicator, the price is going up, so this is tilted up while the RSI is going down, so you're making a lower high while the price is making a higher high. Okay, you also have bearish divergence here on the monthly, so that's not a good sign. So you notice that there's some kind of problem here early on. Could you have a third one? Yes. Have we ever had a third one before? No. So that's something to worry about, right? So the RSI is telling a story. From a longer term perspective. Okay, can you do any trend lines here? The RSI is not the best for trend lines on the monthly, okay, at least for Bitcoin. So, see, I mean, you can draw where all these peaks touch here. So let's pull this up again. We'll kind of zoom in. So you've got a touch here, you've got a touch here, and then a touch here. Let's draw it a little bit better. Okay, so our breakout point is right here. So you've broken trend, and this trend line was pushing us down, and once we finally broke out of it, that was probably where the bull run started. But if you look over here, it's difficult to draw a trend line, and over here it's also difficult to draw a trend line. It's just kind of ugly looking, right? Like it just doesn't fit. So you don't really see much of a trend there, but you do see it here. So if in the last cycle we were looking at this, and we're saying, okay, well, the trend has been broken. So where did that trend break? It broke right here. Okay, so you knew that the bottom of the market was close. With the other factors we pay attention to as well, that's this is just one thing to pay attention to. So that was a good sign to be buying. If you would have bought there, you would have been down on your money probably 20 or 30%. Let's see, somewhere around there. 30, 25%. However, it was very close to the bottom of the market cycle. So buying within this cluster of price would have DCA'd you closer to the bottom. Okay, but the monthly's not super great at that, right? Because we've only seen it one time. But those are the things that you can notice on a monthly chart. Okay, so let's go down a time frame to see if there's more accurate data to notice trends of something. Okay, the same thing's also happening on a 2 week. So we're at 2 weeks. You have a high here. You have a lower high, a lower high, a lower high, a lower high. Okay, so that is accurate for a market cycle top and then you also have bearish divergence, which is telling you that there's a problem on BTC currently. Okay, can you draw any kind of trend lines here? So let's just look at, well, we'll look at the past 2 market cycles. So from 2021 all the way to now, and then from 2017 to 21. You can find them in all of them, right? Well, we'll just look at all of them. Okay, so there is the market cycle top here, and then we've got a trend line there. Okay. This one's not super accurate. I probably wouldn't use this one, but I would use this right here, because you've got 1 touch, 2 touches, almost 3 touches. Okay, let's look at the next one here. You have 2 touches right there, and then a touch here, and a retest, and then a break, and then you would have your next trend here. And you're going to catch more trends the lower time frame that you go on, and there's going to be more touches, so it's kind of more accurate. So as you retested this, you finally broke out of it. Well, let's go to the other one here. Okay, so you have 2 touches, and then you finally broke out of the trend line over here, though it still did fall significantly from that point. So in the future, I probably wouldn't use the 2 week all that much. The next trend line is here, but price started going up right after a while. The next trend line is here, and then once you actually broke out of the trend line, you started making higher price action. So about right here is where you broke out, and then price went up from there. Okay, here's your I would almost actually do this for this one. So here's your next. Okay, so there's your breakout point. Okay, you broke out here. Okay, so you started to have a trend reversal. So that would have been a very accurate time to be buying. Now you have bearish divergence here, which is a problem, right? Price going up, and then indicator going down. And you can touch it one more time, so you can have a higher price action with the RSI going down. Okay, so the 2 week is okay for the RSI. A lot of the times I like to stick to the weekly for the RSI. I think it's more accurate whenever you're determining trends. So let's go down to the weekly. And now you have probably a more reliable set of trend lines. No, I wouldn't even use that. Let's look at here. No, I wouldn't even use that either. Probably longer trend lines, right? So there's your breakout point right here. And then I would use that as a breakout. I would use that as a trend line as well. Let's look at this one. I would probably use that as a trend line as well. The problem with the RSI, and you have these big peaks, the trend lines just aren't very helpful. But longer term trend lines can show some sort of value, especially paired with the RSI. So the breaking point from this one was right here. Okay, it's not super accurate because that was like probably a 50% fall. However, this one here was very accurate. The bottom of the market was in, and then price started going up at that point. So using time analysis as well for market cycles would be really helpful for this also. Okay, so you have bearish divergence from this point to this point. You got higher price action, so that's telling you that there's a problem in the market cycle. And we use something called Elliott wave, right, to predict if the market cycle top is in. And then also time analysis, which is helpful. But you had your breakout point right here. So that breakout was telling you the bottom of the market is in. What other trends can you notice? You can look at support and resistance. Okay, we haven't really looked at this too much. And it's pretty helpful. Right? So we really want to stay above this level of support. Okay, because you had a bounce here, you had a fall, a bounce here. So that's the floor of our price action. So we want to start to climb. What we're probably going to see, and this is a trend line, is some kind of channel here that eventually breaks to the downside, and then that's where the really bad drops would occur. So we don't want to drop from where we're at now. We want to keep this as support. But what I'm thinking is going to happen if we stay in this channel is that we're going to come back up to test this with maybe higher price action, and then that would be the market cycle top. So these are the things that you can catch on the RSI. Now you can look at supports all the way back from, way over here, and this has kind of been the floor for Bitcoin. So the next market cycle bottom would probably come back down to test this level of support. Might go a little bit lower, it might stop a little bit sooner, because the trend it's not like the monthly. It's not making a lower low, it's kind of just being random, but it's sticking around this price. But these, once you pass through these lines, that was the bear market bottom. Okay, so those are the types of trends that you can find in the RSI. Do I look at the only other thing that I would look at is like a 3-day, okay, and a daily. So typically every time you enter under the 30 line, price action reverses for a while after that point. Sometimes it can go way down here, sometimes it just barely touches it. But those are like bigger buy opportunities. Okay, so let's look at here. Let's look at here. Well, we'll look at both of them. Maybe even here. It did not enter the area, but it's close enough to where I would say it's probably time to buy here. Okay. So sometimes you get divergence over there as well. But let's look at what happened with the price at these points. So you had a pretty big bounce here. You had the next one here was another big bounce. Right here it was the bottom of the market cycle. Right here you had a really big bounce. And then right here you had the market cycle bottom, or pretty close to the bottom. So those are just things that you want to be like, okay, so we're in that area. What else are the other charts suggesting that we're in a market cycle bottom? So you can sit here and compare the 3-day RSI with the monthly if you're looking for a bottom. Okay, so let's draw the lines here. This was the actual market cycle bottom, but we entered it twice. And then let's go back to a monthly chart. Okay, then we'll put our rules here that state. This is the first thing I did on this chart. So you have a low here. Okay, you have a lower low, and at these green lines are we making have we made a lower low yet? Right here at this first green line, no, we have not. Okay, so we need to wait a little bit longer, and then at this green line, yes, we did. So those rules apply, and using the trends will help you determine the best times to really be buying. So that is kind of how the trends of the RSI can help you predict where the bottom is or when's the best time to buy, and then using smaller time frames, to kind of plan your entry. That last part could have been a little bit hard to follow, but hopefully you kind of understand how I'm getting that. So you use longer time frames for trends, and then you use shorter time frames for predicting when is the better time to buy for the highest percentage gain. And past that, I mean, you can go to a 1 day as well, and then you can say, well, buying under the 30 line is under the 30 line is a pretty good time to be accumulating a lot of the time, but it's not the best way to predict that there's going to be a price increase. I mean, there's always, if you enter this area, there's always some kind of price increase. You just don't know what percent it is, and it could go farther down. Smaller time frames, you can catch divergences. So for example, price has been going down as the indicator was going up, and that's how you can kind of see that price is going to reverse here pretty soon. Okay, it might just reverse a little bit, and then it might have another leg of bearish divergence, but it's not always the case. It's something just to pay attention to. Okay, if you ever see divergence, bullish divergence, it's a good time to really accumulate a position. Doesn't mean it's going to be the long-term reversal, but there's going to be a short-term reversal. That's why you want to look at longer time frames to see, are the rules applying to the past market cycles to what's applying today. So that's why different time frames on the RSI is important. And then also you pair it with the stochastic RSI and the MACD. Now you could just use one of these oscillators and do pretty well, but if the more that you pair 2 or 3 indicators, the more accurate things can be. Now you don't want a whole bunch of different indicators to use all the time for small decisions, because it can get kind of confusing. But for like longer term trends, the RSI is really helpful for that. Shorter stuff, I would say the stochastic RSI is better, and then the MACD shows you the momentum in the market. Other than that, I mean, you can look at smaller time frames, but that's more just like day trading, and we like to swing trade and invest in here. There's the lower time frames, the more fake outs that you're going to get, but it's hard to manipulate the longer term time frames. Easy to manipulate small term time frames, harder to manipulate longer term. Okay guys, I think that's probably it on the RSI. It covers how I use it and why I use it. It's pretty helpful. So hopefully that clears things up. And if you have any questions, let me know.